So when you talk about Oracle Fusion Cloud Financials applications, right, the very first point is what is the difference between Oracle Fusion Financials and Oracle Fusion Cloud Financials? Let's look at this point. Oracle Fusion Financials applications. It could be financials or anything. Oracle Fusion Cloud Financials applications. Okay, what is the difference between these two? Okay, what's the difference between these two titles? One is Oracle Fusion Financials applications. The other one is Oracle Fusion Cloud Financials applications. What is the difference between these two? The actual application, actual products what Oracle has is Oracle Fusion applications. It could be financials or a CM or any other applications. So what are the applications Oracle has? If you are going to use those applications by installing in our own server. In the last session, we discussed about on-premise environment where every client can have their own servers. They install and they manage the applications within their own servers. If that is the case, within the application, within their own servers, if you are going to install Oracle Fusion Financial application or any other applications, okay, that we call it as it is. The product name is Oracle Fusion Financials applications or Oracle Fusion SCM applications or HCM applications. It could be anything. We call as it is. So instead of having your own servers, if you are going to use Oracle provided virtual servers which works with a cloud computing, cloud technique or say cloud computing. We discussed in the last session. If any client wants to use this Oracle Fusion applications from Oracle, there is a options available. Okay, there is an option called as SaaS, PaaS, IaaS. If any company is going to use SaaS or PaaS related subscriptions from Oracle instead of having their own server, in that scenario, we call the same applications as a Oracle Fusion Cloud Financials applications. We are including the term called as cloud since through cloud computing we are accessing the same applications. It completely depends where the applications are deployed. If you are maintaining the Oracle Fusion applications in our own server, then call it as Oracle Fusion Financials applications. Instead of maintaining in our own server, if servers are going to be managed by Oracle and if they are going to create virtual servers for us, if you are going to access the applications through virtual servers through technique called as cloud computing or technology called as cloud computing, so in that case, that applications we call as Oracle Fusion Cloud Financials application. Okay, just will include the term called as cloud. If you are not going to maintain your servers are going to be managed by Oracle. If you are going to access these applications with virtual servers, it's matter of where applications are deployed. If those are deployed in our own server, call it as Oracle Fusion Financial applications. Don't include term called as cloud. If the servers are managed by Oracle, call it as Oracle Fusion Cloud Financials applications. So in terms of functionality, there is no difference. Okay. So where we are deploying those applications in which servers, accordingly you can call it as Fusion Financials or Fusion Cloud Financials. And then within the applications, whatever the functionality Oracle is providing doesn't make any difference between these two deployments. Okay. So this is a point we have to understand. Now we'll see what we are going to learn as a part of Oracle Fusion Financials or Cloud Financials application. Now whatever we are going to use Cloud Financials only since it's a cloud servers. Now what we are going to learn. When you talk about any company, there will be finance department. If organization is very big within the finance, there would be segregation of different sub departments. Ideally in the companies you can see payables department, okay, Okay, receivables department and asset department, and to deal with the cash, maybe cash department. Okay, so primarily these are the major departments which you can see as a part of finance. It all deals with the finance. When you say payables, the payables departments, okay, the payables department deal with the cash where they'll make the payments to the supplier. When I talk about receivables department, the departments deals with the cash. It's all about receiving the payments from the customers. As a department, they'll maintain all the fixed assets, lands, buildings, etc. And cash department directly they deal with the cash. So these all the departments are dealing with the cash nothing but finance. So that is the reason these all departments we call as finance departments. Okay, finance department. Okay, the finance department is all you can call as subdivision, sub departments. Okay, so if you segment finance department, this is how you can segment, you can segregate, okay, based on the activities what the department do. Payables department, receivables department, asset department, cash department. There could be one department who will be monitoring and managing all the activities which takes place across all these departments that you may call as common department. Okay, common department. Now what payables department does? Okay, there are many activities where payables department will involve, but to understand very high level, the simple point is the payables department ideally they'll create the invoices. They'll create payables invoices and they'll process the payments to suppliers. This is a core responsibility of payables department. In the payables department, whenever the purchasing department purchase something, they'll create the payables invoices, okay, which is supplier how much our organization has to pay. With the details they'll create the payables invoices, and whenever we arrive the due date, as per the due date, the payables department will take the responsibility of making the payment to suppliers. Okay, whenever our organization purchases something, against the purchase the payables department creates payable invoices and they'll process the payments. What is the primary responsibility of receivables department? So they create sales invoices. This you can call as payables invoices or you can name it as purchase invoices. Anything you can use. You can call as payables invoices or purchase invoice or supplier invoices, also any term you can use. Once we start working with that department related activities, we'll discuss more detail level. Now just it's all about introduction, very high level, what department, what core activities performs. So receivables department is responsibilities, they create the sales invoices. Whenever sale takes place within the organization, within the sales department, based on the sales department sale activity, the receivables department will create sales invoice. Whenever they receive the payment from the customer, the receivables department will record customer receipt. Okay, so when we sell to the customers, so to which customer, what we are selling, how much customer has to pay, with all the details, the receivables department will record sales invoice. Whenever we get the payment from the customer, how much we received, the payment from which customer we received, with all the details will create the customer receipt, or you can call it as cash receipt. Okay, any term you can use, you can call it as cash receipt also. Whenever we get the payment from customer, that we can record in the receivables department. The next department is asset department. What is the responsibility of asset department? The asset department responsibility is maintaining the fixed assets. Okay, so fixed assets, by using within the asset department we can just take care of the assets, fixed assets. What are fixed assets means? It could be lands or buildings or vehicles, computers, furniture, what are the fixed assets we have in our organization. Okay, all can be managed within the asset department. Based on the usage, we'll calculate the depreciation. And what is the responsibility of cash department? So primarily cash department responsibility is managing the bank accounts. What are the bank accounts are owned by company? All the bank accounts need to be managed by cash department, and they'll just take care of the reconciliation part. Okay, bank statement reconciliation. Okay, they'll just always cross check as per their payables department payments. As per payables department, how many payments we processed, how many are reflecting in the bank statement. As per receivables, how many payments we received from the customers, how many are reflecting in the bank statement. They'll cross check so that if there is any mismatch, they'll try to find out the reasons. When we work on the cash department related activities, we'll discuss more detail level. For now, just try to understand the cash department responsibilities, maintaining the bank accounts and performing the bank statement reconciliations, where they cross check bank statement information with the payables payments data and the receivables receipts data. And the common department, ideally, by collecting the data from all these departments, they can prepare the financial reports. Okay, so here we are taking very primary activities which can be performed by each and every department. Once we start working on each and every department related activities, there are many points which you have to understand. We'll discuss more detail level, and we'll see what scenario, how the transactions can be performed in each and every department. Now we have all these departments. So what Oracle did is, for each department, they introduced one application. So in the payables department, what we can do, we can create the purchase invoice and we can process the payments. So to create the purchase invoices and payments for payables department, Oracle has one application called as Oracle Fusion Cloud Payables application, or you can call as accounts payable application. Okay, Oracle Fusion Cloud accounts payable application. And this cloud, yes, cloud you can use, or else you can ignore when you talk about these applications, no issues. Simply you can call as Oracle Fusion accounts payables application. By using this Oracle Fusion Cloud accounts payable application, the companies can create the purchase invoices and they can process the payments. And what is the responsibility of receivables department? The receivables department responsibility is creating the sales invoices and creating the cash receipts whenever they receive the payment from their customers. To create the sales invoices and to create the cash receipts whenever they get payments from the customers, okay, to record this create sales invoice and to record the cash receipts, we have application from Oracle called as Oracle Fusion accounts receivables. Okay, you can call it as application or you don't need to include. Fine. Oracle Fusion accounts receivable application. This Oracle Fusion accounts payable application, in short, you can say simply AP. AP means accounts payables. Which accounts payables? Oracle Fusion accounts payables. The same way, for receivables department, we have an application called as Oracle Fusion accounts receivable, that you can call as receivables, accounts receivable, AR application. Okay, to manage all the sales invoices and do cash receipts process, for receivables department, we have application from Oracle called as Oracle Fusion accounts receivable. And we have asset department. What is the responsibility of asset department? The asset department responsibility is maintaining the fixed assets and calculating the depreciation. To maintain the fixed assets information, to calculate the depreciation and to perform many other asset related activities, we have an application from Oracle, that is Oracle Fusion Fixed Assets. Fixed assets. Short you can say FA, fixed assets. By using Oracle Fusion Fixed Assets, we can maintain the assets, and we can calculate the depreciation, and many other activities which are related to assets we can handle. We'll see when we are working on that application. And cash department. What is the responsibility of cash department? The cash department responsibility is maintaining the bank accounts and performing the bank statement reconciliation. To maintain the bank accounts and to perform the bank statement reconciliation and other bank related transactions, we have an application from Oracle called as Oracle Fusion Cash Management. This you can call as CM. You can call as a CM, or else you can call as CE. The reason is, in Oracle there is one more application called as cost management. This is a cash management. The other application we have is a cost management. So for both, the short name would be CM only. That is the reason for cash management you can use as a CM, or you can refer as a CE. CE means cash entry system, nothing but cash management. You can use any short name. Okay, you can call it as CM. The other short name you have to understand, CE also stands for cash management only. CE stands for cash entry, nothing but it refers cash management application. And common department. What is the responsibility of common department? It collects the data from all these department related activities. From all these departments, all the transaction data it will collect, and it involves in the financial report preparation. The data it will collect from all the departments. This common department can prepare the financial reports. To prepare the financial reports by collecting the data from all these applications, we have an application from Oracle called Oracle Fusion General Ledger application. In short, we call it GL. Okay, these are the core financial applications. Okay, by using the accounts payable AP application, you can create the purchase invoice and you can process the payments. Not only those, you can perform some other activities also. When we start working on this accounts payable application, we'll discuss about all those concepts and we'll be dealing. By using the AR, accounts receivables, Oracle Fusion accounts receivable, you can create the sales invoices and you can record the cash receipts. And you can do many other activities also. We will discuss those. By using Oracle fixed assets, FA, you can maintain the assets and you can calculate the depreciations. By using the Oracle Fusion cash management, CM, you can maintain the bank accounts and you can perform the bank statement reconciliations. By using the Oracle Fusion General Ledger application, you can prepare the financial reports. Okay, so this is how we have different applications from Oracle which will support specific department related activities. The same way here, if you are going to, okay, here in the payables, accounts payable application, if you are going to create the purchase invoice, prior to that there should be some purchasing activity. The purchasing activity and all will take place in the purchasing department. So other departments which are very much connected with the finance departments are, say, we have many other departments, but we have to understand few departments. Say inventory department, we have purchasing department, we have, say, sales department. So when we are dealing with these finance applications, we have to understand about what is the responsibility of these departments also, because these departments will have very much connected process in the business or in terms of applications. Okay, there will be communication between these finance departments and these departments. These finance departments will have a communication with these departments in terms of business process. So what is the responsibility of inventory department? In inventory department, primarily we can maintain the stock. Okay, and if there is any requirement in the organization, we can create the requisitions. Requisition means if you need 100 computers, if you have 100 computer shortage, you will raise the requisition. Requisition means it says we need 100 computers in the inventory. That's it. That's how we can create the requisitions. And purchasing department. The purchasing department responsibility is purchasing the any material whatever organization required. So the purchasing department responsibility is primarily they'll just create the purchase orders. Okay, they'll create the purchase orders and they'll receive the material. Okay, they'll take the responsibility of placing the orders to suppliers and receiving the material. And we'll discuss more detail level also. Okay, for now you can take this simple point. The inventory department responsibility is maintaining the stock, and receivables department and raising the requisitions. If there is any shortage in the inventory department will take the responsibility of raising the requisition. Based on the requisitions, the purchasing department will purchase from the suppliers, and once the supplier will deliver the material will be received by purchasing department, or you can say inventory department also. But purchasing department will take care of this process till the material will be received by our organization. Ideally, the material will be received into inventory department. And what is the responsibility of sales department? Whenever they get order from the customers, that they'll create as a sales orders. Okay, they'll create the sales orders and they'll be shipping the material to customer. Okay, ship to customer. Say there is a customer who placed order for 100 computers. The sales department will receive the order from the customer, and that information that they'll check whether stock is available or not in the inventory department. If stock is available, the same stock, they'll make sure that the material is shipped to the requested customer. So that this is what primarily these departments will do, and we'll see detailed process also. For now you can try to understand these points. So inventory department responsibility is to maintain the stock and to create the requisitions. The purchasing department responsibility is to create the purchase orders and receiving the materials, and they perform many other activities as a part of the relevant classes will go more detail level. And sales department responsibility is creating the sales orders. Whenever they get orders from customers, they'll create sales orders and they'll ship the material to the customer as they require. And to handle all these activities, we have a different applications from Oracle. Okay, to handle all these activities, we have a different applications from Oracle. To handle inventory department related activities, here for our understanding, I'm just taking very core activities. Once we get into those applications, we'll discuss more detail level. Okay, to handle inventory department activities like maintaining the stock and raising the requisitions if there is any shortage within the inventory, we have an application from Oracle that we call as Oracle Fusion Inventory Application. Okay, in short we call as INV. There is another name also for this. When we are working on the application, we'll discuss about it. Or else this you can call as Oracle Product Information Management. This we call as PIM. Okay, so it's a part of inventory only. We'll discuss more detail level. As of now, you can take the term called as Oracle Fusion Inventory only. This why they given, how it works, how those will connected work. We'll discuss more detail level. By using the Oracle Fusion Inventory, okay, you can just maintain the stock and you can raise the requisitions if any shortage in the warehouse. And purchasing department, what is the responsibility of purchasing department? Purchasing whatever organization required. Further, they have to create the purchase orders, they have to place the orders to supplier, and they'll make sure that our organization received the material. Okay, so for receiving, whenever organization receive the material, they'll create the material related receipts that you can call as goods receipt note also. Okay, you can call as they'll receive the material, or you can say they'll create GRN. GRN stands for goods receipt note. That means which goods, how much quantity they received into organization, that they'll make a note. That you can simply call as a receipt, or you can call as GRN, or you can say they'll receive the material simply. So to create the purchase orders and to create the GRN, we have an application from Oracle called Oracle Fusion Purchasing Application. Within this purchasing department, the primary activity is purchase orders creation. It's very much primary. That is the legal documents. Once we place the order to suppliers, supplier will respond by supplying the material. That is the reason within the purchase department, very primary activity is creating the purchase orders. So that is the reason for purchasing application what Oracle given, Oracle Fusion Purchasing. For this, the short name they given as a PO. Okay, activities wise, PO stands for purchase order. Purchase order. PO stands for purchase order. Activities wise, application point of view, PO means which application you have to say Oracle Fusion Purchasing. Within the purchasing application, very primary activity is creating the purchase orders. That is the reason they given the short name as PO. What does it mean by PO application? Means you have to say purchasing application. What do you mean by PO within the purchasing application? Means you have to say purchase order. Okay, so by using the Oracle Fusion Purchasing application, you can create the purchase orders and you can receive the material, or you can call as create GRNs, goods receipt note, how much material from which supplier, how much quantity we received, you can record. And what is the responsibility of sales department? The sales department responsibility is maintaining, creating the sales orders. Whenever they get the order from customer, that they'll record as a sales order and they'll ship the material to the customers. Okay, that we call that activities. These activities to manage within the application. We have a application from Oracle called as Oracle Fusion Order Management Application. You can call it as OM. Okay, by using the Oracle Fusion Order Management Application, you can create the sales orders and you can perform the shipping to the customers. Okay, these are very key points, but we'll discuss more detail. So this is what we have to understand. Now, payables department is going to create purchase invoices that they'll create because of purchasing department is purchased. Against these purchases, the payables department will make the payment. If receivables department is going to create sales invoices, that is because of sales department, what they are selling based on the sales order, they'll create the sales invoices. So that's how there is some dependency. If purchasing department is creating the purchase orders, the dependency is because in inventory stock is required. There is a requirement in the inventory. When there is a requirement in the inventory, then inventory will create the requisition. Then purchasing department will raise the purchase orders. Whenever organization will receive the material, then payables department should take the responsibility of making the payment. Before that, they'll create the purchase invoice also. That's how there will be dependency between the applications to execute the process. If you take example of sales department, whenever they do the sales activity, because of the sales activity, the receivables department will create the sales invoice and they'll receive the payment from the customers and they'll record as a cash receipt. So that's how the departments will have a communication to execute the specific purchasing process or sales processes. So we'll see how these cycles will work, how the process can be executed across all these applications. Okay, these are the primary applications within the finance. We have few other applications also, expense and tax related. Those will be discussing. Okay, as a part of course, we'll be covering those also. But to understand the business process, these are the primary applications. Okay, these departments we call as financials related departments. And these departments we call as supply chain management departments. Okay, supply chain management departments. So these are finance departments. These are supply chain management departments. These are finance departments. Okay, for all these finance departments, we have these applications. For these supply chain management related departments, we have these applications to manage the department related activities, the process which takes place across the departments. Any questions here to understand what are the points we discussed? Any questions from anyone, please? No questions. Now let's talk about the procurement process. If any organization is going to purchase, okay, anything from for their business, so what process they follow and what are the different departments involved. If we take example of individual, take example, I'm a student. Okay, I'm a student, and I'm a student. If I'm learning something, what I have to do is, when I'm a student, I have to identify what is my requirement. Say when I'm just learning this Fusion applications or any other applications or any software related course, I may identify I need laptop. First, I have to identify what is my requirement. My requirement is laptop. If I can have laptop, then I can just learn everything. I can go through that application process. I can practice. That is the reason my requirement may be laptop. So I have to identify my requirement. Once I identify my requirement, what I have to do is I have to, since I'm a student, I have to take the permission from my parents. I should tell them I need laptop so that they can approve, they can accept, and they can send the money. Then with that money, I'll go and visit the shops. I'll tell them this is my requirement, this is the configuration I required. I need so and so laptop. This is a configuration requirement. I'll be visiting the multiple shops and I'll be taking the quotation from them. I may collect the quotation from 5 shops. Then I'll be analyzing those quotations. Analyzing the quotation means which shop is offering that laptop with the same required configuration at less price. Okay, that's what I have to analyze. Once I analyze, I'll select one shop, I'll go to that shop, I'll make the payment and I'll take the laptop. Done. I identified my requirement and I taken the permission from my parents and I just visited shops, I taken the quotations, I analyze the quotations, who is giving the best price, and finally I taken the decision to buy the laptop. I paid the money, I taken the laptop. So here no one is involving. It's a one person related, here entity is the person. So if the same, my requirement is laptop purchase. Since laptop purchase is my requirement, I can just involve to execute all these activities. Finally, I can pay and I can get the laptop. If the same activity, if that is the requirement of the company, different departments will involve in these activities. So now let's take example. One company has to buy laptop. In that case, what process need to be followed? Okay, just remember for which department, which applications we have, and what is the short name for each and every application. And related to supply chain management also, what are the applications we have, what are the short names we have. Just remember, by looking at this flow diagram, you can understand the complete process. Let's see how the procurement takes place in the organization. Okay, say this is inventory department. I've taken the application called as Oracle Fusion Inventory, INV. So in this Oracle Fusion Inventory application can be managed by inventory department, right? The purchasing department will maintain this application, and that's how for each and every department we have a different application. So if any requirement in the inventory, if any requirement in the organization, the purchasing department or within the Oracle Fusion Inventory application, we raise the purchase requisition. In the requisition, we specify, say we need 10 laptops. Okay, we need 10 laptops. Before that, we'll check. How much. Say, or else take simple example. There is one customer. Okay, there is one customer. Customer placed order for 100 laptops. When customer placed the order for 100 laptops, the order will come to sales department. The sales department will check with the inventory department whether stock is available or not. Say stock is not available, out of stock. In that case, inventory department should take the responsibility of getting the stock into inventory. So in that case, the inventory department, okay, so for inventory department, we will use the application called as Oracle Fusion Inventory. Okay, inventory department, what they will do is they'll raise the purchase requisition, PR, purchase requisition. In the purchase requisition, they'll specify how many laptops they require. They'll raise the purchase requisition. Within that, they'll specify how many laptops they required, by which date they required, all the details they specify. If required, Okay, which custom, they can give other details also, what is our price, etc. And there will be communication. There will be communication from sales department to inventory department saying that how many laptops they required, how soon they required, what is the price, etc. The customer is ready to take. These sort of communication would be there. But ultimately, the inventory department has to create the purchase requisition, which states which items they required and how much quantity they required, when they required, and where they required. So inventory department will take the responsibility of creating the purchase requisition, and internally they have to get the approvals for that. Once purchase requisition is approved by inventory department, that approved requisition they'll pass to purchasing department. When you say purchasing department, the purchasing department uses the application called as Oracle Fusion Purchasing, PO. So by using this Oracle Fusion Purchasing, what purchasing department can do is they'll create RFQ, request for quotation. RFQ stands for request for quotation. So on what base they'll create the RFQ? Based on the approved requisition. If you have approved requisition for 50 laptops, even the purchasing department will request the suppliers to give the quotation for 50 laptops. Okay, RFQ means request for quotation. The purchasing department will request the suppliers to provide the quotation for 50 laptops. Whenever this purchasing department will request for quotations, the suppliers will give the quotations. So the purchasing department will receive the quotations. Okay, purchasing department will receive the quotations. So whenever the purchasing department will receive the quotation, they'll do the quote analysis. So which supplier is giving at best price, which supplier is allowing which payment terms. One supplier may say each laptop is 25,000, but we have to pay immediately. Other supplier may say each laptop cost is 30,000, but we can pay after 6 months. So that's how we'll be getting the quotations from the suppliers. So the quotations need to be analyzed by purchasing department. They'll analyze the quotations and they'll choose the best quotations. Which the supplier is giving at best price and best terms. Accordingly, the purchasing department will choose the best quotation. Once they choose the best quotation, they will place the order to that supplier. Okay, they'll place the purchase order saying that we are okay with the price and terms, whatever you are giving through quotation. So that's how we'll be just placing the order to the supplier. Okay, for supplier, which items we require, how much quantity we require, on which date we require, where supplier has to send. By specifying all the details, the purchasing department will create purchase order, and internally within the purchasing department, the purchase order should be approved. Okay, internally they'll take the approvals for purchase orders, and that purchase order they'll be sending to the supplier. Once purchase order is received by supplier, they will respond to the purchase order by supplying the material. So the supplier will send the material to our organization. Since this process is handled by purchasing department, the purchasing department will record GRN, goods receipt note. It's nothing but receipt. How much material quantities are received by our organization, that can be recorded by purchasing department, or else this can be recorded by inventory department also. Ideally, the stock will be received by inventory. Since purchasing department is taking care of the procurement activity, the purchasing department can record the GRN, or else that can be recorded by inventory department also. Okay, as per our applications, that can be recorded within the Oracle Fusion Purchasing application or Oracle Fusion Inventory application. And if any damage to the items whatever we received from the supplier, we can perform the purchase returns. Okay, say we received 100 quantity, 100 laptops, and 2 laptops got damaged. So in that case, we have to return that quantity back to the supplier. So that activity also can be handled by purchase department, or it can be done by inventory department also. So this is the responsibility of purchasing department. If there is any requirement in the organization, inventory department will take the responsibility of raising the requisitions, and they'll get the approvals. Once they get approvals, they'll pass that information to purchasing department. With purchasing department, based on the approved requisition, they'll create the RFQ, request for quotations. They'll receive the quotations from suppliers, and they analyze the quotations, and they'll choose the best quotation out of those based on the price and other terms, and they'll place the order to supplier. Before placing the order to supplier, they'll take the internal approvals. okay, to proceed further. And whenever supplier will supply the material, the purchase department or inventory department will record the GRN, which is nothing but goods receipt note, which says which item, how much quantity we received, from which supplier we received, all the details will be there as a part of GRN. And if any damage for the items, for the received items, those can be returned to the suppliers, that we call as purchase returns. The purchase returns also you can record from the purchasing or inventory application or departments. So once we receive the material, if required, then only we do the purchase returns, but that won't be standard business process, right? If there is any situation where we have to return the material back to the customer, we perform the purchase returns. That can be done from the purchasing application or inventory application. Instead of calling as applications, we can call as departments, because these applications are used by specific departments only. Fine. Once we receive the material from the supplier, the purchasing department will record GRN, and the purchasing department will pass this GRN information to accounts payable department. Okay, the accounts payable department, based on this GRN information, the accounts payables department will create purchase invoice. Within the purchase invoice, we can find the details like to which supplier we have to pay, how much we have to pay, when we have to pay, how we have to pay. How means through check or bank account transfers or EFT payments, the different mode of payments. Okay, so based on the goods receipt note, the payables department or accounts payables department will create purchase invoices, and based on the due date, the payables department will take the responsibility of making the payments. So by using the accounts payable application, you can create the purchase invoice and payments, which should be handled by payables department. So, so here, whatever the purchase invoice you are recording, sometimes this purchase invoice may be related to asset purchase. Say, for example, we purchase land. So land is current asset, fixed asset. Okay, land is fixed asset. So whenever this payables department record purchase invoice which is related to asset related purchase invoice, when you purchase asset also we have to make the payment. Before that we have to create the purchase invoice. If this purchase invoice related to asset purchase, the payables department will pass that information to asset department. Here we taken the names as the application names, but reality those are the departments. Okay, for each department these are the applications we use. Okay, if any purchase invoice is related to asset related purchase, this payables department will pass that information to this asset department. Based on that purchase invoice information, that asset department will create fixed asset. If the purchase invoice is related to land purchase, they'll create the land as a fixed asset. If the purchase invoice is related to some vehicle purchase, they'll create fixed asset. Whenever they create fixed assets, based on usage, they'll calculate the depreciation. And what payables department is doing, whatever we are recording in the payables department, say in Oracle Fusion Accounts Payable application, okay, the purchase invoice information we are sharing with the asset department if that purchase invoice is related to asset. If the purchase invoice is related to some expense, we don't need to share with asset department. Okay, we don't need to share with any department. If the purchase invoice is related to asset purchase, then only we have to share. And within the Oracle Accounts Payable application, what are the payments we process, the payment information we have to share with the Oracle Fusion Cash Management, or you can call as Cash Department. So once we share this payment information with the Oracle Fusion Cash Management application, with the help of this payments data, the cash management application or cash department can perform bank statement reconciliations. They'll get the bank statement from banker, they'll get the payment information from accounts payables. Between the bank statement and accounts payable payment data, they'll do the comparison. Say as per accounts payable application, we process 100 payments. As per bank statement, only 80 payments. So they have to find out the reasons, what is the difference, why the 20 difference we have between our bank statement and our system data. They may identify as per accounts payables, yes, we processed 100 payments, but bank statement is showing only 80 payments. The reason could be we issued the checks for 100 payments, 100 payments we might have issued checks to the suppliers, but suppliers might not submit it in the bank for clearing process. So this is how we have to identify. Okay. Otherwise, as per accounts payable, you may see you processed 10 payments, but bank statement is showing payments are processed for 20. 20 payments are processed. Then you have to identify. As per our system, only 10 payments only be processed. How come bank statement shows 20 payments are processed? You have to identify the reason. That could be fraud which happened in the company, or else reality you might have issued 20 payments, but there may be case where you forgot to enter those payments in the system. So these all mistakes easily can be identified if you perform the bank statement reconciliations. Okay, and along with that, we know the cash department responsibility is maintaining the bank accounts. So in the place of cash department, we are using Oracle Fusion cash management application. So by using this Oracle Fusion cash management application, you can maintain the bank accounts and you can perform the bank statement reconciliations. So from all these departments, or say from all these applications, we can send the data to Oracle Fusion General Ledger application to prepare the financial reports. We'll send the data from inventory to General Ledger, purchasing to General Ledger, cash management to General Ledger, accounts payables to General Ledger, fixed assets to General Ledger. All the data will be sending to this General Ledger application where you can prepare the financial reports. Already we discussed this General Ledger application for the purpose of common department to prepare the financial reports. So this process we call as P2P cycle. Okay, this we call as P2P cycle. P2P stands for procure to pay. Right from procurement. Okay, if you want to procure something, you have to raise the requisition. And once you raise the requisition, we'll just go with this process and we'll receive the payment. Finally, we'll make the payment. Okay, so this process, whatever I selected, this process we call as P2P cycle, procure to pay cycle. Right from requisitions to till payment, this process we call as P2P cycle. When you create the payments and the payables, that information will share with the cash management, and if any asset information is available in the accounts payable, that will share with the fixed assets. Finally, all the data will be sending to General Ledger application for financial reporting. That is the reason you have to consider these applications also, or these departments also, in this P2P cycle. Okay. So this is a point we have to understand. If somebody is going to ask you the question, explain P2P cycle or procure to pay cycle, you have to say, if there is any requirement in the organization, the inventory department will raise the requisition and they'll get the approvals. Based on the approved requisition, purchasing department will create the RFQs, they'll receive the quotations, they analyze, they'll choose the best quotation and they'll place the purchase order with approvals. And whenever the organization receives the material, the organization records GRN or receipt that can be recorded in the purchasing application or inventory application, or say purchasing department or inventory department. You can refer department or you can refer application name. In terms of system, we call all these as applications, but when you discuss, you always refer as a department only. Okay. So if any purchase returns, that would be taken care by purchasing department or inventory department. And once we receive the material into organization, the purchasing department will pass that information, GRN information, to the payables department. Based on the GRN information, the payables department will create the purchase invoices and they'll process the payments. If the purchase invoice is related to asset purchase, okay, so asset purchase, the payables department will pass that information to fixed assets department. Based on that purchase invoice information, the fixed assets department can create the fixed assets. Based on the usage, they can calculate the depreciation. So what are the payments are processed by payables department? The payment information the payables department will share with the cash management department. So by the help of the payments information, they can do the bank statement reconciliation by comparing these payments with the bank statement. Other side, the cash department responsibility is maintaining the bank accounts. And finally, all the data will be sharing with the General Ledger application for financial reports. So this is what we have to understand when we talk about P2P cycle. Any questions here to understand about P2P cycle, please? Hope you got the point. For each department, we have separate application. When you talk about, you can call it as application or you can call it as department. So but when you talk about this P2P cycle, instead of referring the application name, refer a department name only. So what are the primary departments in the P2P cycle means I can say these three departments. P2P means procure to pay. The procurement starts with requisition, procure to pay. Payment will end within the payables application. These are the three primary departments within the P2P cycle. These are the other departments where the payables department will share the information. So these are the different other applications which are connected with the payables application for data communication purpose. So any questions on this P2P cycle from anyone, please? Okay.
Yeah, hi Lakshman. Is
Please.
there any change with respect to the regular EBS process, what we had in
No,
R12?
same process. See, regular business EBS process means that is based on the business, right? Oracle just given the solution in EBS to handle the real business processes. So even application is going to be changed. The business process cannot be changed because applications are changed. To support any sort of standard business processes, Oracle developed and designed the solutions. So it could be EBS or it could be Fusion or it could be some other applications. The business process is same. To handle that business process, how the applications should be designed and connected, how the process flow should be handled within the application that companies will take care of. Accordingly, only Oracle build these Fusion applications. In Fusion also same process.
Okay, thank you.
Yeah.
Lakshman question.
Yeah.
It's Ravi. So, is there any additional features they added in the Fusion applications compared to the
Yes, they added
previous?
few additional features and they did some enhancements. Okay. Those and all we'll see when we are going through the classes. But
Okay.
new features, there are few enhancements, and these and all we can find as a part of specific applications related discussions.
Okay.
Yeah.
Okay. In terms of percentage, how much change it is there compared to the previous version R12?
So change in the sense, see in EBS everything you can manage with the forms. Here everything they converted to web pages. The way
Oh, okay.
setups in EBS that's totally different in the Fusion application. And the concept different, many things they changed. Okay, even if you have a good amount of experience in EBS, directly you cannot do anything in the Fusion application. One time you have to go through the process how things can be handled in the Fusion. How to do the setups, what setups you can do from where, what is the navigation, how to perform the transaction, what options, where we have to do certain activities on the transaction, reporting, etc. Those all they changed. Okay, so core product they taken from the EBS only. They did some enhancements and they added some features and they changed the framework, look and feel, etc. So by considering all these points and they change the architecture, all those things also, you could say the 30 to 40% difference you can see when you compare with EBS.
Wow. Okay.
Yeah. Any other questions?
Thank you.
Yeah, thanks.
Hi, Lakshman.
Yeah, please.
Actually, I'm asking about if one company is not taking the purchasing and inventory module for offering, they will start from purchase invoice directly?
No, I'm sorry, I didn't get you. Could you please repeat your question?
Actually, I'm asking if one company didn't take purchasing and inventory module for offering.
Okay.
They will start directly from purchase invoice?
No, see, it's up to that company business process and which applications they want to use from Oracle Fusion and which applications they want to use from other applications. Accordingly, they can pick. See, they may use these applications. Okay, for inventory department and purchase department, they may use applications from other vendors, and these applications they may use from Oracle. But these applications can be connected, or else they may use these applications from Fusion and these applications they may use from other applications other than Oracle. Still they can use. If they take the license or subscription for these applications cannot be used. For which applications they are taking the subscription, only those applications can be used. If If you take the license for these applications, you cannot touch these applications. If you take the license for these applications, you cannot use these applications. It's all about which applications they want to use as a part of Oracle Fusion. They have to take the subscription, then only they can use. By taking the subscription for procurement, they cannot create invoices in the payables. No, that is not allowed by Oracle.
Which mean if I want to use the purchase invoice, means I have to take the purchasing and the inventory module, right? Okay.
See,
Okay, thank you.
no inventory.
Tell me.
No, inventory module you want to take or not, you can take the decision. Say you may take, okay, so this payables application from Oracle and the inventory application you may have from other vendor. Okay, inventory application and all these applications you may have from other vendor. So different applications you can take from the different vendors and you can manage, but that will become little complex in terms of managing the process. So if any company is going to implement this Fusion applications, mostly they'll try to take all the application from Fusion only. If required, if there are some reasons, few applications they may run outside of the Fusion, those can be integrated with the Fusion application. They can connect with the Fusion. That's how the data will flow from other applications to Fusion applications.
Okay, thank you.
Yeah, thanks. That's how they can choose. Any other questions, please? Okay, wherever you see the application name, you treat as that is a department name. Okay, for each department, these are the applications we have. So that's all about P2P cycle. So the P2P cycle, where P2P cycle starts, when there is requirement in the organization, will raise the requisition. When the P2P cycle ends, once we make the payment to the supplier. Apart from that, so to share the data, asset related invoice data with asset department, payments data with the cash department, and all the data with the general ledger. So this is how these applications are connected, or these departments will have a communication in the business reality. Now let's look at sales process. Okay, let's look at sales process. When you talk about sales process, say you received an order from the customer for 100 laptops. When you receive the order from the customer, you will check the stock availability within the inventory department. Okay, as per applications, Oracle Fusion Inventory. We'll check the stock availability within the inventory. If stock is available, okay, we have to give the confirmation to the customer. So who received the order from the customer? Say our customer placed an order for 100 laptops. The order will be received by order management department, or the order management department you can call a sales department also. For sales department only, we use the application called as Oracle Fusion Order Management. So whenever there is order from the customer, the sales department will receive the order. Our sales department will use this order management application. So whenever we get order from the customer, we record the sales order in the order management application. So once we receive, the sales department will check the stock availability with inventory department. If stock is available, they can give the confirmation to customer saying that they are going to supply. Giving the confirmation to the customer as we are going to supply, that we record in the system as a book sales order. Booking sales order is nothing but giving the confirmation to customer as we are going to supply the material. Once you give the confirmation to the customer, we have to start moving the material from our inventory to customer location. So when you talk about inventory, this is how inventory structure looks like. Say this total area you can take as inventory. Within that you can have some partitions, those we call as sub-inventories. Sub-inventory 1, sub-inventory 2, sub-inventory 3, sub-inventory 4. And there could be some areas which we call as a receiving area or shipping area or staging area. So say you purchase something from supplier. When you purchase something from supplier, we receive the material into the staging area. First we'll receive into this area, then that material need to be maintained in which sub-inventory. From that area will be moving into respective sub-inventories. Say you are going to sell to the customer. When you are selling to the customer, the actual material will be maintained within the sub-inventories. So first we'll move the material from sub-inventory to the shipping area. From there we'll ship to the customer. That means when we are receiving the material into our inventory, into specific sub-inventory, first we'll take into the staging area, then we'll place into sub-inventories. If you are shipping the material to the customer, first we'll pick the material from sub-inventory and we'll place in this shipping area that will be sending to the customer. So this area we are using as a common area when we are receiving or when we are shipping. This is a place where we place the items temporary purpose. That is the reason this area you can call as staging area or receiving area when we are receiving from supplier. When you are supplying to the customers, that you can call as shipping area also. Okay, any naming convention you can use. So this is a place ideally where we place the material when we are receiving or when we are shipping for a temporary purpose. So this is the structure of inventory. Now say for example, we received order from customer. Who will receive? The sales department. Sales department uses application called as Oracle Fusion Order Management. Whenever we get the order from the customer, that will record in the Oracle Fusion Order Management as a sales order. And we will check with the inventory department whether stock is available or not. If stock is available, we'll book the sales order. That means we'll give the confirmation to the customer as we are going to supply. Sometimes if stock may not be available, still we can give the confirmation to the customer. How? We can talk to the inventory department, okay, saying that, so this is the requirement we have, we got one order from the customer. Can you get that material within the time? If purchasing department is going to say, yes, I can just get that 100 laptops within 1 week, based on that confirmation, we can inform to the customer as we are going to supply. That means if stock is available, you can promise to the customer. Even if stock is not available, if you can supply that material within the time by procuring from the suppliers, in that case also you can book the sales order. Okay, if there is any supply possibility by purchasing from supplier, in that case also you can book the sales order. Now once we book the sales order, we have to pick the material from inventory and we have to ship to the customer. Then what inventory department will do is, first they have to pick the material from sub-inventory to staging. This activity will be done by warehouse team or inventory team. What they'll do is, what customer required 100 laptops. Okay, customer required 100 laptops. Say 100 laptops we have in your warehouse, that too we have within the sub-inventory 1. Now what we have to do, you have to move the material from sub-inventory 1 to the staging area. Okay, you have to move to the staging area or say shipping area. We'll move the material from sub-inventory to shipping area. Once we move this material from here to there, the inventory department should inform to sales department. Sales department uses application called as Oracle Fusion Order Management. They'll inform to sales department saying, we just moved material from sub-inventory to staging. Whenever we move the material from sub-inventory to the staging area, that should be tracked within the order management as a pick release. That means we picked the material from sub-inventory and we placed in the staging. Once we place the material here in the staging, the next step is we have to ship to the customer. This activity also will be done by inventory department, or else there could be separate shipping department also. Depending on organization size, they may have one department to handle all these functions, or there could be some different departments also to take care of these different activities. Picking by one team, shipping by another team, inventory management by other team, or else all these inventory management and picking, shipping can be done by one team only. Okay, totally depends. So based on the organization size. So whenever we move the material from our inventory to customer location, this information inventory will pass to sales department. Since sales department will use Oracle Fusion Order Management application, within that application they will record that status as a ship confirmed. Ship confirmed means we ship the material to customer. So why this why we have to record in the order management as a pick release happened and ship confirmation is done? The reason is customer will be in touch with the sales department. If they get the call from sales department, if they ask what is the status of our order, then sales department should be responsible to say we pick the material and we ship the material. This communication they should be able to pass to the customer. That is the reason the sales department will take the responsibility of maintaining all this information based on the physical activities which takes place within the inventory department. Okay, so Whenever we get the order from the customer, we'll record that as a sales order in the order management application. And whenever you identify the quantities are available or else we can supply to the customer, the confirmation whatever you give to the customer, that you will record in the system in this order management application as a booking the sales order. Whenever we move the material from sub inventory to staging, that we will record as a quick release. Whenever we move the material from our staging to or else our inventory to customer location, that we will track in the order management application as a ship confirm. Once you confirm the shipping, supplier customer will receive the material. If there is any damage for the material, customer will return that material. Whenever we receive that material from the customer as a return, we will record as a sales returns. We sold to the customer and customer is returning back to us, that we have to record in our books as a sales returns. That also can be handled by using the Oracle Fusion Order Management application. Okay, so by using the Oracle Fusion Order Management application, you can create the sales orders and you can book the sales orders. You can perform the pick release, ship confirmation. In reality, these activities takes place in the inventory and can be tracked in the order management application. If any sales returns from the customers, that also you can record within the order management application. Okay, so this is the responsibility of sales department. Since sales department uses the application called as Oracle Fusion Order Management, by using Oracle Fusion Order Management, you can handle all these activities. Not only this, there are many other also. We'll discuss more detail level. These are very primary core activities what order management department does. Fine. Once shipment confirmation is done, this order management department will pass this information to receivables department. Okay, the receivables department. What receivables department does? They'll just maintain the application called as Oracle Fusion Account Receivables. By using that application, they can create the sales order. Based on the ship confirmation details, the receivables department will create sales invoice in AR. What information they'll include in the sales invoice? What are the information this order management department is providing to sales receivables department? Those details only they'll enter in the sales invoice. When you look at the sales invoice, you could see who's the customer, what we sold, how much customer has to pay, when the customer has to pay. All the details you can see in the sales invoice. And this receivables department will take the responsibility of collecting the payment from customer. Whenever they receive the payment from customer, they'll create the receipt, or you can call as that is a customer payment. We'll be receiving the payment from customer, means customer is making the payment to us, that you can record as a customer payment. So this receivables department will share the receipts information with the cash management for bank statement reconciliation purpose. Okay, because cash department should cross-check our receivables related payments with bank statement. As per receivables, how many payments we received, how many payments whatever we received from customer, how many are reflecting in the bank statement, the two records. Okay, the two statements the cash department will cross check, bank statement and the receivables department customer payment statement, the both they will cross check. That's what we call as bank statement reconciliation. Along with that, we already discussed cash department responsibilities maintaining the bank accounts. And finally, all this information will share with the general ledger application for financial reporting purpose. Okay, so by using Oracle Fusion Inventory, we can maintain the stock, and if any order from the customer, that you can record as a sales order in the order management application. And if stock is available, you can give the confirmation to the customer, that we call as book sales order. And the next task is picking the pick release. Whenever we pick the material from sub inventory and when we place in the staging, that we call as pick release. It's nothing but moving the material from sub inventory to staging, we call as pick release. Whenever we move the material from our inventory to customer location, that will record as a ship confirmation. Whenever customer is going to return the material back to us, that we can record as a sales returns in order management application. And the order management application will pass the ship confirmation details with the receivables department. Based on the ship confirmation, the receivables department can create sales invoices and whenever they get the payment from the customer, that they can record as a receipt or customer payment. So this receipt information, the receivables department will share with the cash department or cash management application to perform the bank statement reconciliations. And finally, all the information will share with the general ledger application to prepare the financial reports. This process we call as O2C cycle. O2C stands for order to cash. Right from receiving order to till we receive the payment from the customer, these activities can be handled in this cycle. Okay, order. We receive the order from the customer. Which order? Sales order. To payment, to cash. We receive the cash from the customer. So these all activities can be handled in the cycle. This we call as order to cash cycle. Right from receiving order to till we receive the payment, all the activities can be handled in this cycle. That is the reason this we are calling as order to cash cycle. Why we are calling this P2P cycle and O2C cycle? Why we are using the term called a cycle? It's a cycling activity. Today, if you are going to purchase, you have to do all these activities. Tomorrow, if you are going to purchase, you may do all these activities. After some time, after a few days, if you are going to do the same process, you have to follow. But the simple point here is, today you are going to buy 100 laptops. Tomorrow also, if you are going to buy 100 laptops, yes, you have to raise the requisition. And again, you may not request for quotations from the vendors. This is all you can avoid, because say yesterday only we identified who is the right vendor to give a best price. So since we identify the customer yesterday or day before yesterday, very recently, again you no need to go with the quotation process. Directly you can place the order, you can receive, and you can proceed with the further process. That's how certain steps can be ignored depending on when you are purchasing, what you are purchasing. So that's how things can be handled. So these are the cycling activity. Again, this is also cycling activity. Whenever you get the order from customer, record the sales order, you have to book, perform pick, release, ship confirmation, pass that information to sales department. We have to collect the payment from customer. Again, if you get order from other customer, also same process you have to follow. It's a cycling activity. It will keep repeating. So that is the reason these two we are calling as cycles, P2P cycle and O2C cycle. If you look at these two processes at a time, this is how the flow diagram. So when I talk about P2P cycle, at inventory level, we just maintain the items, we'll create the requisition and we'll get the approvals, and purchasing department will, the purchasing department will raise the RFQs, they'll get the quotation, they'll analyze, they'll choose the best quotation, they'll place the purchase orders, they'll record the GRN, if required, they perform the purchase returns. The purchasing department will pass the information to payables department related to their purchases GRN information. Based on that, accounts payables department can create the purchase invoice and they'll process the payments. If the purchase invoice related to asset purchase, if invoice is asset purchase invoice, the payables department will share that information with the fixed assets department. Based on that information, the fixed assets department or within the fixed assets application, you can create the fixed assets and you can calculate the depreciation. And the payables department will share the payment information with the cash management application. With the help of the payment information, the cash management can perform bank statement reconciliation. Finally, we'll send the data from cash management to GL, from all these applications to GL. This is what we call as P2P cycle. When you talk about O2C, when you get order from the customer, we'll record the sales order. SO means sales order. And we'll check with inventory whether stock is available or not. If stock is available, we'll book the sales order. That means we'll give the confirmation to the customer. Whenever we move the material from sub-inventory to staging, that will track in the order management as a quick release. Whenever we ship the material from customer location, our location to customer location, that will capture as a track as a ship confirmation. If any returns from the customers, that will record as a sales returns within the order management application. And the order management department will share ship confirmation details with the receivables department. Based on that information, the receivables department, AR means accounts receivable, simply you can call it the receivables department. The receivables department will create the sales invoices. Whenever they get the payment from customer, they'll record the receipt. The receipt information receivables department will share with the cash management for the purpose of bank statement reconciliations. Finally, all the data will send to GL for the purpose of financial reports. Okay, So this is how these are the different applications are involved, or say different departments. These are all the different departments. Each department uses different application. Now we are referring everything with application name only. So these are the different applications are involved. When you say application department, remember that. These are all the different applications involved in this P2P and O2C cycle. When you look at this P2P and O2C cycles, you can understand which departments or which applications are involving in the P2P and O2C. Sorry. This inventory, cash management, GL. These three applications are involved in the P2P as well as O2C, right? These are the common departments in the P2P and O2C cycles. So these applications, okay, which are marked in yellow color, these applications we call as financials applications, already discussed. Okay, GL, AP, AR, CM, FA, these we call as financial applications. This inventory, PO, order management applications, these all we call as supply chain management applications. When we are going to work on these financial applications, since these supply chain applications are connected with the financial application, you should understand the basics about the supply chain management applications also. In our classes, I'll be covering this area also, very basic level, what level of knowledge we require when we are going to work on these financial applications. That is the reason we'll be covering this P2P cycle as well as O2C cycle. These two cycles will be covering so that you can understand the complete process, okay, from the scratch to final execution of the process. So that's how we have this within the course. We are going to handle this to P2P and O2C, but our primary focus on these applications. But we'll be covering this inventory, purchasing, order management also, to understand what level of knowledge we require to run this P2P cycle and O2C cycle. Okay, so these all are the applications. These applications are financial applications. These are SCM applications. But from all the applications, we get the data into general ledger application. That is the reason this application we call as general ledger. This is a ledger, general ledger. But all other than general ledger, all the applications we call as sub ledger applications. Okay, from payables you get the data, from receivables you get the data. When you compare these applications with the general ledger, these are the sub parts only. Okay, that is the reason other than GL, all applications we call as sub ledger application. If we compare with the GL, okay, in GL if there are 100 records, the 100 records will be coming from all these applications. AP maybe 10 records, AR maybe from 20 records, PO maybe 2 records, inventory 2 records, OM. So this is how, if you compare with the GL, okay, all other applications are sub parts as a part of GL data. Whatever the data you have in GL, okay, that data is coming from different applications. Compared to GL, other applications are sub. So that is the reason those we call as sub ledger applications. So this is what we have to understand about P2P and O2C cycles. Any questions from anyone, please?
A Lakshman question.
Yeah.
Yeah. So when you're going to discuss about this AP, CM, and AR, the rest of the modules, financial modules, will you be discussing about how to reconcile the subledgers with the GL and also the
Yes,
accounting
exactly.
process?
We'll cover everything, because after going through these classes, you should be able to work on the real-time project. That is the target. That is the objective of
Okay.
I'll be covering each and
Thank
everything, how to do the setups, what are the functionalities we have, I mean to say what features we have, in which business scenario the feature can be used. If you want to implement, how to set it up, how to run the process, how accounting takes place, okay, how the reports can be run,
Yeah.
how you can do the reconciliation between the GL and the subledger applications. This all will be covering, how to close the periods. This all will be
Okay.
the part of our training.
Okay. Anything like how to do customizations or
That
will
is
you
a
be
part of
discussing about
technical
that?
consultant. Okay, that customizations will be handled by technical people, but as a part of like here, how to create the basic custom reports and all, I'll take you through by writing the SQL queries, etc. But other customization, creating the new pages, etc., that should be done by ADF. Okay, by the ADF technology only you can do. That should be done by only technical people.
Okay. So the other question is like somebody is trying to migrate from R12 to R13. So will you able to explain that process, that migration process?
The process is simple. You cannot migrate. Okay.
Oh,
You have to go with as a re-implementation. If any client is using EBS, if they want to come to Fusion, okay, the EBS they have to treat as a legacy system, and Fusion again they have to do all the required setups and they have to migrate the data from EBS to Fusion. That's it. There is no upgrade to move from EBS to Fusion. It has to be done as a re-implementation in this Fusion environment. That's all.
okay.
Yeah.
So how much change is there with the tables design, like from R12 to R13? Is there a major difference?
There is no much difference. You can see the tables as these since the product functionality they taken from EBS only for finance applications. For other applications, there is some slight changes. When you talk about inventory, the table level changes we have. But when you talk about financials, the same tables we are going to use, same tables we have.
Okay.
The product from EBS only, there is slight changes and all. Functionality wise, there is some changes here and there, but the table structures, they didn't change. They remain same. Right? Okay.
So here also we have SLA concept.
Yeah. SLA purpose is accounting generation, right? Yes, here also accounting entries need to be generated. That is required, that is there. Everything we have, what you see in EBS, here also we have, but you could see here and there some slight changes and new functionalities. That's it. The basic logics and all, they should not change. They didn't change also.
Okay.
Fine.
Thank you.
Yeah, thanks.
Yeah, Lakshman, it's Ravi again. So when we get instance access, is there any way we can connect to that backend database using SQL Developer or whatever it is stored?
No, you cannot use the external tools. Within the instance itself, you have a page from where you can go and write the queries. That's how they given the flexibility. You cannot connect with the Toad or SQL Developer or other tools. Okay, in case of cloud, everything the queries all you can write within the application only. I'll show you how to do that.
Okay, thanks.
Fine. Okay, that's all for today. We'll connect tomorrow same time. In tomorrow's session, I'll take you through how to create the user and we'll go through some basics of application. Then again, we'll discuss few other points and we'll try to execute the same in the instance. Okay, we'll connect tomorrow same time. Thank you all. Have a good day and good night.